Very good morning. Today's topic will be on crop insurance under the unit Drawn on IoT in Agriculture. This is the topic which I have picked from Automation Techniques in Agriculture Engineering. Before going into the session, I like to have some small recap. At the previous classes, we have seen something about drone and IoT applications and also what is the user interface analysis, web app design, workflow for the user interface. Along with the drone and IoT applications, we have seen something about crop yield estimation and unit of yield. Today we'll see what is crop insurance. Crop insurance is a means of protecting the agriculturist against financial losses due to uncertainties that may arise from crop failures or losses arising from named or all unforeseen perils beyond their control. That means that we have to insure the crop by providing some hand in protecting the agriculturist in financial circumstances. If there is going to be some prediction that could be made with the drone, then it would be helpful for us to identify the crop yield or the failure that has to happen in the future aspects. So if we are having some insurance over protecting that agricultural field, then it would be helpful for the agriculturist to lend a hand in protecting from the financial losses due to the uncertainties that could happen in the near future. Next is, what is the main objective of using crop insurance? In order to provide insurance coverage and financial support, we have to have the crop insurance protective plans. That is how it will help us from the events of natural calamities, either the pest or diseases that will incur the failure of the agriculture and reduce the crop yield, and providing them the insurance coverage and the financial support they have been lost from the natural calamities or the failures that has happened in the crop yield. It will help us to encourage the farmers to adopt progressive farming practices, high value inputs and higher technology in agriculture. It will also help in stabilize the farm incomes, particularly in disaster years. These three are the main objective of including the crop insurance. Next is, why do we need the crop insurance and the agricultural insurance in accordance with India? First, we will see something about the national crop insurance scheme that has been followed in India nowadays. The crops covered under the scheme are the broad groups in respect of which the past yield data based on the crop cutting experiments which are being available for the adequate number of years, and the requisite numbers of that crop cutting experience that are estimated from the yield during the proposed seasons. Some of the crops that could be covered under them are the food crops, oil seeds, sugar canes, cottons, potatoes. Other than these, the other annual commercial and annual horticultural crops that are subjected to availability of the past yield data will be covered in a period of 3 years. These crops which will be covered in next year will have to be spelt before the closing of the preceding year. So these are the crops that are covered under this insurance scheme. The risk covered and exclusions. Comprehensive risk insurance that has been covering under this are the natural calamities like natural fire and lightning, storm, hailstone, cyclone, typhoon, tempest, hurricane, tornado, flood, inundation and landslide, droughts and dry spells. Even that also includes the pest and diseases. These 5 are the major losses that will have been incurred while cultivating, and this will cause a major financial loss for the agriculturist. So this scheme covers the major losses that will happen under these 5 categories. Sum insured and the limit of coverage are, in case of a loany farmer like the sum insured will be at least equal to the amount of crop loan advanced, and in case of the insurance charges shall be an additionality to the scale of finance for the purpose of obtaining that loan. In matters of crop loan disbursement procedures, guidelines of RBI and NABARD shall be considered, and the value of the threshold yield level will be up to 150% of the average yield of notified area on payment of premium at commercial rates. The premium rates have been shown here for the kharif crops, rabi crops and the kharif and rabi crops. For example, for the bajra and oil seeds and also for wheats and annual commercial and horticultural crops, the premium rates have been distributed over in the slide. The sharing of risk. Risk will be shared by the government and the IA in the following proportion, such as the 5 years the claim could be up to 150% of the premium, and above it the ceiling out of the corpus fund. And the annual commercial crops and the cultural crops has a 200% of premium, therefore subject to the satisfactory claim experience and the first 3 years, and after which the 200% of premium thereafter shall be paid out of corpus fund. The crop yield estimation, as we have seen in the previous topic itself, that plays a major role in this scheme. The state and UN government depends over the crop yield estimation from the series of crop cutting experiments and resultant yield estimates. For the example, for every taluka and tehsil, the minimum of crop cutting experience will be of 16 range, and for gram panchayat it would be of 8. These are some of the estimation for the crop yields that are considered under the state government. So this plays a major role in the national scheme that provides us the Indian insurance. So this is the topic which I prefer for today's class. See you in the next class. Thank you.